Hey there, everyone. Another exciting day in the markets today. And despite all that crazy up and down movement that we had, boy, oh boy, did we end up in the green for the markets. And well, who could have predicted that Jerome Powell come out? It was different to see him laughing and smiling and talking. And I don't know if you saw the part at all when they asked about the salary that he gets paid, and he said 190,000, and then asked if it was worth it. And he kind of made this slight head shake of a no, it's not worth it. I can't imagine the amount of stress that's on him. And even though $190,000 doesn't, it might sound like a lot of money to some people, it might not sound like much money to others. Knowing the responsibilities and the pressures that he faces, I don't know that it sounds like a lot of money. I think that that's a job that would just age you quickly. So, well, let me get that out of the way for right now. We'll talk a little bit more about what he said. We'll also talk about the other economic indicators that are coming up and talk about where we see the market going from here for the next several weeks to maybe even several months. So thank you. And if you want to see more of what I have for you, down in the description, find the link for the Patreon. Click that, come over and join my community, get access to my research, my notes, my private Discord. You can come on over and talk with me, talk with us, pick my brain. I'd absolutely love to see you over there. So down in the description, check out that link. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. So Jerome Powell today was a peaceful bird, just a pretty little dove as he was talking about inflation. And honestly, it sounded like he kind of threw away anything about the tightened labor market, thinking like, hey, maybe it's just structural, and we can get through this inflation, see it moderate. Even though it's not over yet, maybe it's just part of where we find ourselves coming out of the pandemic, that we won't necessarily see that spike in wages, leading to a wage price spiral because of these new jobs that are coming in. So that part, I don't know that the jobs numbers are going to be major catalysts for us unless we see like huge amounts of continued strength and huge amounts of continued tightening. If this was a one-off thing for January, then I don't see minor fluctuations up and down in unemployment with the different jobs reports that we get. I don't think that those are going to be the big catalyst for us anymore. Consumer sentiment, I think, is going to be a huge part of that. And please remember that consumer sentiment report comes out this Friday. So that's something that we'll want to watch. Tuesday, Valentine's Day, is also going to be a wild ride for us. The CPI is something that for January, I put out the historical analysis from those CPI numbers, and I was looking at it that was for December, and I put in December's data, started looking at it for January, started looking at consensus for January. Right now, CPI for all items for January, the consensus is coming in at something like 0.5, which in my opinion is crazy high. Now that includes food and energy, which are known to be volatile. I don't think the energy has been very kind to us. Chipotle just put out their earnings, and we know that food prices with inflation have not been kind to them, and also the increase, might as well just mention wages in there for their employees. With opening up a lot of new stores like they did, they still had decent earnings. However, it was a miss on their part. I think it was the second time in 5 years. So Chipotle is enormous, and hearing what they have to say about the prices dragging on their margins, I think that is something to look forward to. And also, since I brought them up, and I didn't listen to their earnings call, that's something that is on my list. I just know some of the highlights that are from it. They did mention that they don't necessarily have pricing power with the lower income population. They said they don't. They said that a lot of their customers make over $75,000, the ones that they see continue to patronize, and also that investors shouldn't be worried about the small drop or modest drop in transactions for the significant boost to margin that they get because of those higher prices that they're charging. So this would be like a balancing act between the two of them. Now they did drop in the after hours 4-ish% on the soft earnings and probably the forward guidance from there. But that sign of pricing power weakness for the lower income earners, that could be a few of the cracks that we're seeing in this. Now, Jerome Powell says that the economy is strong, and we see a lot of signs that we have a strong economy. And even though there might be a slowdown in GDP, that we would still have positive growth overall. So the market, I believe, is still rallying because it's still seeing that case where we don't enter a recession, but we do have a pullback. We start to see the disinflation, and we see, according to Jerome Powell, he thinks that we'll see services inflation start to come down in the second half of 2023. Jerome Powell has mentioned several times now that it's likely that they're going to have to raise rates several more times to see this through. So going back to the CPI then, 0.5 for all items, that's something I really want to double check. That sounds like super high, but if that's food and energy causing those to happen, now that is against the soft decrease that we had, or the soft December that we had, that was a decrease from November. So that negative 0.1 that we had in December of 2022. So January going month over that, might have a little bit less of a hurdle to jump over. And I have part of that in my analysis. So I will be linking that over at the Patreon, and then so the full report will be there along with the access to the spreadsheet. So you get both of those. Should you come over and join me, check out that link down in the description. I will be summarizing some of it, hitting the highlights on YouTube and sharing that out with you and my thoughts on that. So core CPI that comes out along with all items on February the 14th. That one right now, the consensus is coming out at 0.4%, which again sounds high. Like 0.3, it's been kind of, I think it went 0.2, 0.3, this 0.4. This would be from the low point of November of 0.2 for month over month inflation for a core CPI. That annualizes to 2.4% inflation. At 0.3, that's 3.6%. And if we're looking for that inflation to be a little bit stickier, well, it'd be nice to stay within that range. 0.4 really starts to push it because that annualizes to 4.8%. Plus, that's a continual rise. We have 3 data points in a row then, which would be that progression from 0.2 to 0.3 to 0.4. And that's just through consensus. And within my analysis, I start to take a look at that sort of change. And is it normal for us to have that change, and how much of a change is normal for us, and how do we know how to interpret that? Those are all things to share when I put out that report later on. I will say that if the market is already pricing in at 0.4% for consensus and it's rallying anyway, that we could be in an okay place for that. And if it comes in lower, I think the market is really going to enjoy that, at least in the short term. Not necessarily as much as if we still had the same story that inflation was going to continue to moderate, especially slightly softer to the downside. And if we see that confirmation, though, like I said, under consensus for either one of them, that is going to be incredible news. So I'll have that out for you likely. Let me see if I hit the Patreon either tonight or tomorrow, and then maybe by tomorrow evening I put out that video on it. If it's not by then it should be for the next morning. So today's Tuesday, tomorrow's Wednesday. So then by Thursday, I would like to have that video out to you guys so you can check it out and see what you think. Also, with these elevated consensus numbers, that really puts the pressure on the PCE that comes out at the end of February, something that all eyes will be on that, as Jerome Powell has mentioned that several times, that looking for 2% inflation coming through PCE index over time. And so we want to see that continue to moderate to help that narrative. Now, if it does stay elevated for a little bit longer, that's also something that he said that he anticipates. He did not give a time frame on when we reach that 2% mark. So that's something that as we make our plans and as we look forward, that also has to be priced into it as well. So we still have those economic catalysts coming up, including the FOMC minutes. Those are things to really pick through to see if there's anything else that we can glean from there, any other insights leading up to that March meeting that we have, I believe March 21st and 22nd. I think I had that date wrong when I said it before. And with that comes the summary of economic projections. And that'll be the next really big thing. I believe that will really give us a telling sign after the Fed has, a few more data points to discuss and see the directions of things to really tell us if they were going to have a higher target federal funds rate, or I should say a higher target rate, or if they're going to keep it the same. And well, as of right now, it doesn't sound, at least he's putting up airs, at the very least, putting on a game face that the rates are not going to be cut within 2023. He didn't really totally definitively answer that question, though. So that's still speculation at this point. We'll have to see if that is something that we get to experience. So just a quick look at the charts. Here we have the SPY, and you can see the uptrend that we're on, sort of forming a bullish channel, if you will, that we keep on hitting across this top diagonal. I'll put on a little ray here so we can see that taking place. And then I'll put another one on the bottom. And maybe, just maybe, we start bouncing off this for a while and really reverse out of the trend, and we have a really nice recovery coming out of that. Now, this is a bit steep. I think that, it might narrow off for us, that it doesn't turn into a full-fledged bullish channel over time, that just that we keep on bouncing around from top to bottom. We're going to have to wait and see that. Plus, we have the moving averages there to act as support for us. So in my opinion, I think that going a little bit sideways, maybe slowing down a little bit, and really finding out where we stand through corporate earnings is going to be forward looking for us. And also, like I said, those economic reports, we can't discount them. And we want to see that inflation does continue to moderate. And if it does hold steady, well, we just want to make sure it's not lifting off again and causing the Fed to have more reason to be any sort of more hawkish than they currently have been or recently have been. We'll take a quick look at the NASDAQ through the Qs. There you go. And check that out. What a very pretty looking chart. So we had this nice little softening in the prices on the Qs, and then today, and see the big green candle. It just makes it look like it was one solid day of up. And markets were kind of hesitant for a while. Look at that in the middle there, straight up, straight back down. So that would be from the 12:30 to 1 o'clock hour. That at first was very, very bullish for markets, quickly reversed back down. There was a bunch of hype, and then it got dumped off again, and then slowly we got that steady rise from Jerome Powell. Like I said, I think most of it was attributing the jobs report number that we had that came out so strong being attributed maybe something a little bit more structural and giving the market hope that we're not going to see that wage price spiral coming through because of that strong demand for workers that just aren't filling those jobs and having to offer more money for those positions than having to increase prices that company produces and then throwing it back on the consumer and then the consumer asking for more wages. So I think that hope that Jerome Powell gave is a potent thing. And really, I don't know that the jobs will be that much of that catalyst anymore that they may have been in the past. I don't think that they're going to panic the markets if they come out near expectations. Really, time's going to tell. We're just going to have to watch those job reports come out, and we're also going to have to watch how wages react in response and see if wages really are moving along with this strong demand for employment. So it is possible over the next few months, maybe to finish out this first quarter, that the markets just are really, really good to us, that we keep on seeing that climb that we have been seeing, that we enter that bullish channel that I showed you on the SPY, and that the NASDAQ would have a very similar look to it as well. And that, maybe we see that inflation does continue to moderate. Maybe it holds a little bit steady. We don't see much of the wages changing. Maybe even services start to tick down earlier than expected. That would be pretty incredible, especially if goods follow it as well. So we're going to have to watch that. We're going to have to watch macroeconomic impacts, and then we'll also have to watch for signs of further global tensions, because if they should flare up on us unexpectedly or have any more black swans, that would also be something concerning for us. So that's what I have for you guys. I think it could be a very good time in the markets, and maybe I'm wrong with the short position that I took out. Again, we're going to have to see as that plays out. I think I'm going to hang on at least until that CPI comes out and see what sort of read that we get with readiness to pull the trigger and have my stops set to make sure that should it be more positive than I expect it to be, that I don't stand to lose any more capital in that short position, and get shaken out of my trade. So that's what I have for you guys today. Like I said, down in the description, check out that link for the Patreon. Come join, be part of my community. Check out the research that I have for you and the Patreon exclusive videos that I've begun putting out. And also, why not come over and chat in the Discord? Link down in the description. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.